Good evening. So, before we start, I'd like you all to visualize this chart. Let's take this off. I'd like you all to visualize this chart in your mind's eye, not in your physical eye. Take a look at it, see the pattern as a drawing, just like that, with no logic being expressed to you. Just look at the patterns for pattern's sake. I know this is unconventional because what we do here as ICT traders, as smart money traders, we do not look at chart patterns in that frame of reference. We look at it for the logic behind that pattern. But in this market review, we are going to do the opposite of it. We are going to look at this as a pattern, just a pattern. Just you can call this a V pattern or any form of pattern you wish to name it. Just look at this as a pattern because I want to convey a piece of information to you guys. All right. So just visualize this in your mind's eye as a pattern. And before we start, this channel as a whole, not just this playlist currently, the channel as a whole is a channel what we're trying to do here is we are trying to convey a set of information to individuals that can hear this message. Does that make sense? So if you can hear the message and you're serious about not wanting to be average, wanting to know how this algorithm books price, wanting to get out of the trenches, tired of the situations you are currently in, or let's just leave the financial aspect out of it. Say you want to learn how the algorithm books price. That is what you're interested in. I'm not talking about you being interested in making money. That is, by the way, that is not for this video. This video and this channel is for people interested in trying to learn how to read price action. All right. And as I said earlier, this video is for the people that can hear the language I'm trying to convey. If you cannot hear the language, I would advise you to go to the original source of this language, which is the Inner Cycle trader, that is Michael J. Huddleston. So you can check out his YouTube. Is the creator of this concept, or should I say this language, let's put it that way. All right, so let's begin. We are reviewing this morning session, that is the 15th of August 2024. All right, so let's start from the hour time frame. So starting from the weekly time frame. All right, so we're starting from the weekly time frame, and this might be a long winding video, so I would have started from the monthly, but I'm trying to make it as short as possible. So we're starting from the weekly time frame. You on your own go into the monthly time frame to see what PDR is in the monthly time frame is price currently reacting to and going to next. All right, so start with this weekly bullish order block. So on the weekly, we have this weekly bullish order block. And here we have a weekly BCI, and just below it we have a weekly BC low. Now, what's the logic being expressed here? Price moved from a buy program down to a sell program and took out this sell side liquidity resting below this swing low here, and price came down to this weekly bullish order block. So going down to the daily time frame, we have these clean highs here, these relative equal highs here as a liquidity pool, that is a draw on liquidity. But also here we have this liquidity void, which aligns with a volume imbalance. So we're going to mark out the liquidity void coupled with the volume imbalance. All right, so we just call this all right. So this is what you have here, and you have this daily bullish order block resting here. So it is daily bearish order block. So we are interested in the midpoint of it, which is the mid threshold of this order block. So the midpoint of this is here. So here you have the mean threshold of a daily bearish order block. All right, note this. Now currently, what kind of patterns do you see in the marketplace? What is the market trying to do currently? Say from this week's trading, as you can see from hindsight, the market is poised to go higher after dropping lower here. So the market is interested in going for higher prices. It has filled this imbalance here and draw up to this bearish order block, this daily bearish order block. All right, so now on the 4-hour, this is what we can visualize on the 4-hour. So on the 4-hour, from that pattern I showed you to visualize in the beginning of this video, inverse your mind's high. Oh no, you don't need to inverse your mind's eye. Look at this price action and imagine that same pattern you saw in the beginning of this video on the 1 minute time frame. So here you have the original consolidation, and then price dropped lower, leaving this imbalance, meaning at the future time in price will be interested in this imbalance here. So this imbalance on the 4-hour is our draw on liquidity, which coincides with the original consolidation. Does that make sense? So this is our draw on liquidity, and price dropped lower here, rallied higher and came down lower, taking out these relative equal lows here. So you have these relative equal lows pushed out here. So we label this so these are relative equal lows resting below here. Now again, look at this pattern. Look at this as a pattern, but now impute the logic aspect of it. Earlier I told you to look at that 1 minute time frame, disregarding any logic, just looking at it as a pattern for pattern's sake. Now I'm currently conveying the logic behind that pattern on the 1 minute time frame, from the higher time frame down to the 1 minute time frame, because price is fractal. Every time you look at price or you think of how the algorithm operates, understand that it operates in a fractal nature. So let's continue. So down to the because this imbalance here is our initial draw on liquidity for today's trading, being Thursday's trading. Let's say this imbalance here was our draw on liquidity. So a low to the high of this imbalance. So here you have the consequent encroachment of this CB. A CB is a down close imbalance. C of 4-hour CB. A CB is a fair value gap on the downside, which is a sell side imbalance, buy side inefficiency. The name of the imbalance is already self-explanatory. Sell side is imbalance, is lacking in buy side. That means buy side is inefficient. That is a CB. Inversely, you have the BC, where the buy side is imbalanced. You have the imbalance on the buy side and the sell side is inefficient. So, all right, this is what you have here. So this is the consequent encroachment of this drawn liquidity. Now, down to the 15-minute time frame. Now, say you are trading the morning session, which generally begins by 8:30 a.m. and then closes by 12 noon. The morning session. Say you are wanting to just partake in this price move only, because one thing, you do not expect your trading time frame, your trading time window, to give you all of the move that price intends to move. This market does not owe you anything. So if the move has already transpired before you come into the marketplace, you sit on your hands and do nothing. Do you understand? Does that make sense? So that is how you operate. You operate with inside this marketplace with, you drop all your spirit of entitlement outside before you come into this marketplace. You work with what it's currently giving you. All right. So here you have the midnight opening price. Yeah. This is the midnight. The midnight open, which is 5465.7. This price is the midnight opening price. So doing London's trading after the midnight opening price, we had price accumulating here. Smart money long position was accumulating here. The when price dropped lower here at 7 o'clock, price rallied higher. So this is the accumulation phase and a manipulation leg lower, and then price rallied higher. This is an expansion leg higher, and this form of expansion leg is a breakaway gap. You know what a breakaway gap is and the logic behind a breakaway gap, meaning you do not want a breakaway gap to be filled. And after this breakaway gap is left here, you had this imbalance created here, this 15-minute fair value gap. So we note this. We are not noting the breakaway gap because we already don't want to see price come down below that breakaway gap. So we are expecting higher prices to where? From the, I think, episode 19 or 18, I prompted you to note how price moves from higher time frame PDRAs, higher time frame key levels, to the directly subordinate lower time frame key levels to deliver price, to facilitate price delivery. So this low here of this Fibonacci, this is the low, this is the midpoint, and this is the high of it. All right, so this is what I'm currently referencing. This is the consequent encroachment of that 4-hour CB. This is the low of it, and here you have the high. Let's just mark out the highs and the low. If you are interested in understanding this logic, you by yourself, you go into your chart and look for it, because this is not for the lazy people. This is for people that are actually interested in understanding what we are talking about. If you are not interested in learning it for yourself, how to do it for yourself, there's no need watching this video. Just forget about it. You can go do some other things. Probably if we have someone in this industry giving out trade signals, you can subscribe to that trade signal, those signal services. So here you have the 4-hour CB. All right, and there you are, because I'm about to take this off. I'm about to take this Fibonacci off. So here you have the 4-hour CB low. Okay, so because I'm taking it off, let me indicate this consequent encroachment of the 4-hour CB. All right, so we have that all marked out. So I'm taking out this. So we noted that I prompted you on the episode 20 or 19, I've forgotten, the video on key levels in this mentorship, in this current playlist. I prompted you that price moves from the lower subordinate, from the higher dominant PDRA to the lower, directly lower subordinate key level. So you had price trade down to this weekly BCI. So when price goes to a weekly BC, you're expecting price to go to a daily PDRA, from a weekly to a daily, from a daily to a 4-hour, from a 4-hour to a 1-hour, from a 1-hour to a 15-minute, like that. That's how the logic goes. All right. So because we have price trace down here from the weekly, we are looking for price to distribute on the daily, which is this main threshold of this daily 1. This is our target number 1. Another daily here, you have this liquidity void from the daily. This liquidity voids are daily PDRAs. All right, so that is it. And now from the daily, price trace from this daily bullish, this daily bearish order block, which is this main threshold of this daily bearish order block. That means you are expecting price to deliver on a 4-hour PDRA. All right, so down to the 5 minutes, this is what we have here. So price trades below here. If you watch the video on power of 3, we had accumulation, manipulation to the downside, and price distributes higher. So now on the 1 minute time frame, because we're expecting price to move from this daily imbalance, from this daily mean threshold of this bearish order block, we're expecting price to deliver to a 4-hour PDRA, which it did here. And you look for the consequent encroachment of that. Sorry, from this 4-hour here, you look for the consequent encroachment. It will be the first draw, then price seeks the high of that CB, and within this trading window, you typically have the second stage distribution or a second stage reaccumulation of price action. This is algorithmic and it goes on every day during this time window, from the 10 a.m. to the, specifically from the 10 a.m. to the 11 a.m. time window, but it generally goes on from throughout the morning session, which is from the 8:30 a.m. to the 12 noon, because from the element to a chase setup, where London typically forms the low or the high of the day, so New York is mostly a continuation phase. So that is what it does. If it does not do that, then you have a reversal on New York. But currently we are trading a continuation pattern, because we are looking, price is seeking this 4-hour CBI. Now to the north and both, I prompted you to look at the 1 minute time frame first, to look at that pattern as a pattern for pattern's sake. Then we looked at the 4-hour as more than patterns. We look at the 4 hours as with logic behind it. For people that didn't visualize the 4-hour way, or they didn't take a screenshot of it, let's one more time look at it. So on the 4-hour, this is what you had here: consolidation, drop slower, price moves higher, come down, left a breakaway gap here, left an imbalance here, institutional order flow entry due here, and then price rallied higher. First stage accumulation, price rallies higher and leaves an imbalance here. That means you're anticipating a second stage reaccumulation, which you have here for yesterday's trading, Wednesday. This is the 4-hour time frame, but we are using the logic because price is fractal. We are using the logic from this set of time frame down to the 1 minute time frame. All right, so back to the 5 minutes. So on the 5 minute time frame in our intraday trading, this is what went on. So we had this rally higher, another rally higher, and another rally higher. This is price continuously sweeping liquidity, continuously interested in buy side liquidity. Now, for traders that trade just patterns and not logic being what we've been discussing from the higher time frames down to this 5 minute time frame currently, that logic that we have been discussing, that I've been trying to pass on to you, that logic, some traders do not trade with that logic. So anybody that does not understand this language we are currently expressing, those are our target, those are our praise, those are our victims, because they already signed the contract to participate in this market. Every time they are they are registering for a broker or a prop firm or whatever medium they used to trade, they have already signed that they accept the risks. So because they signed that, and we do sign that risks, so in this frame of thought, we are seeing those people that do not trade with this logic as our victims. They are the victims we are interested in, not the lower traders, not the smaller retail traders. We're talking about the funds, the hedge funds, traders in quotes that meet investors on hedge funds to supply them capital to trade. They trade with big size. They trade with $100 million, $1 billion. So we, with our $100,000 account, we are just coming in this marketplace to grab our piece of cake from their $100 million or a $1 billion pool of liquidity that they are willing liquidity. They willingly come into this marketplace with a flawed logic to participate in this marketplace. And we are not here to, this is not a game, this is not a video game, this is real life, this is actual money. This is, each candlestick is people's livelihood being sucked out of them, their wealth being transferred. So back to it. So those people that trade with patterns, that see patterns as just patterns, they will see this as price making a 3-legged pattern, or they'll call this 3 Indians pattern, 1, 2, 3. So they're expecting price to come lower. And price is not interested in lower prices, because we're interested in this 4-hour CB high, because we are moving from a daily PDRA to a 4-hour PDRA. That is our draw liquidity, the 4-hour PDRA, which is the 4-hour CBI. Now, because we are bullish, institutional order flow is telling us that liquidity is being swept on the buy side and being purged on the sell side. So here we have liquidity purge here on the sell side. So we label this sell stops purged. So sell stops were purged here, and let's use this buy side swept, buy stops swept. So buy stops were swept here. And one more thing, this will be quick. You should try your possible best to understand yourself first. I don't know how you are going to do it. I would advise you to understand yourself while you are learning this trading. First, tape reading only. Tape reading is a form of meditation. It's a therapeutic session. So when you understand how this the message being conveyed by this algorithm. Even though you are not currently speculating, you can be spectating, which is stick reading, and it's therapeutic, and it will help you understand the marketplace while you understand yourself more. Now, why am I saying this? If you do not understand yourself, every new playlist that would release in this channel or in Ask This channel or whichever, you keep on jumping towards it. You keep on jumping and looking for the holy grail. You keep on being a forever student and not moving forward. So you'd have to try to know yourself. So as you are trying to know yourself, each video will be different things will be revealed to you, and the concepts that align more with your personality, you note it down. You note it down on your journal. You should revisit your journal every week to understand what you've written down, and the ones that resonate with you, you go to your chart and backtest it more, and if it does resonate with you, you adopt that as your own personal model. So that is how it is. We are still trying to build a model. This current playlist is about what we are currently at is building your own model. So we are currently at the building your own models phase. So all what we have been doing from episode 20 up is the framework of you building your own model. From episode 1 to episode 20 is the language. I'm trying to communicate the language as quickly and as fast as I can to you. You cannot learn this concept in 5 minutes. That's just the truth. You have to learn it long. So that is the price you are paying. This video is not free. You're not watching a free video. Nothing is really free in this world. Even this video, this you are currently paying. You are paying. You watching this video is you paying. You are paying for knowledge that you deemed worthy of your time. If you do not feel this knowledge is worthy of your time, you won't be here watching this video. So you are actually paying. This is not free. And I thought about it. Posting it on YouTube is better. Is me getting my values worth of these videos that I'm making, because posting them on Telegram will just be reshared or probably, I don't know. So posting it here is me seeing the number of people actually paying to watch this video. They are paying with their time. Your time is more valuable, and you are paying. Let's continue. So buy stops were being swept and sell stops were purged. Now, because from those higher time frames, we've noticed that the first stage has been done, and we are anticipating the second stage on the 15-minute time frame, and from the higher time frame down to the lower time frame, because we are anticipating a second stage. Every time price goes below an old low, we see that as a liquidity sweep, as a liquidity purge, expecting higher prices. Now, if this is your model, when price purge this liquidity instantly, your order will be here. Your stop loss will be below the first stage reaccumulation. That's where your stop loss will be if you are taking this as a second stage reaccumulation turtle soup entry drill. So that will be your entry. Now, if you are a more conservative trader and you want to see more information from what price is currently conveying, so when price creates this low here and then purged sell stops here, price rallied higher, expansion leg higher. From the elements of a trade setup, we noted that after an expansion leg, price will leave an imbalance or an order block, mostly an imbalance. Then price will come down to fill that imbalance, and that price will retrace to that imbalance and then goes higher. So after an expansion, you have a retracement. So now, from those higher time frames, the patterns we see there that we've been communicating the logic, this is the reflection on the 1 minute time frame. And because price is fractal, when price push this sell stops here at 10 a.m. candle here on Thursday's candle, 10 a.m. When price purge this candle, if you are confident that this is a sell stop purge that's occurring, you enter here and your stop loss at your second stage, at your first stage reaccumulation low, that swing low, that will be your stop loss. But if you are not entering from this purge here, you are waiting for more confirmation in price. You wait for an expansion leg, which price does here, and left this imbalance here. So here you have this fair value gap. I will not label it. You go by yourself and you label it yourself. So when price dropped lower, this now is an intermediate term low. An intermediate term low is a swing low that rebalances an imbalance. So here you have this long-term low, here you have this long-term high. Price rallies up, leaves an imbalance, then creates an intermediate term low. What did we discuss about an intermediate term low? An intermediate term low is a swing point, in price that rebalanced an imbalance, and typically it leaves a bullish order block, for in this case, or a fair value gap at the intermediate term point. So here you have price leaving this imbalance, this bullish order block here. So this bullish order block now will be used as currently now to be used as the last final boarding call for the traders that missed this turtle soup entry first, and the traders that missed this rebalancing of this imbalance. Price will give them a final boarding call, which is this bullish order block. And as you can see, after price trades higher here, price dug lower to this bullish order block, and also for the last time to this bullish order block. And as you can see, because here now is the first stage, here you have the smart money reversal, and here you have the first stage distribution reaccumulation, and now the second stage reaccumulation. Now if you are operating on this 1 minute factor, here will be your entry point, this second stage reaccumulation. Your stop loss will be at the first stage low, because understanding market structure is understanding how to negate your bias. So this is a negation of you expecting buy stops being swept. This is your ultimate joint liquidity, this 4-hour CB high. But you do not need price to get to your dawn liquidity for you to be profitable. Your dawn liquidity is just like a magnet. It's just a magnet. So from this second stage to this here is about 8 handles. Your stop loss is about 3.6 handles. So you are risking 3.6 to get 8 handles. You do not need to wait for your joint liquidity to be tapped, or you can take out partials here, which I recommend if you are just getting to know your model here now. So you take out partials here and allow the trade to ride to where it wants to ride to your joint liquidity, which is about 25 handles. All right, so that is it. This is the business for this morning session for the 15th of August trading session. Did you understand how the idea was communicated from the 1 minute time frame, then to the higher time frames, and also to the down back to the 1 minute time frame? So you have this first stage, you have this second stage, and price join towards this buy stops, and also this higher time frame PDRA, which is the liquidity void, and also the 4-hour CB. So I hope you got something from this video, and I'll talk to you in the next video. All right, and goodbye.